Hey guys, let's talk about how to trade during choppy markets. So you guys have noticed that we are in a good old-fashioned bear market in tech stocks since November. If you look at the chart of the QQQs here, we really started to roll over in a majority of these stocks in November. Even though the indexes were hanging out near highs, you see all these stocks like Roblox, Affirm, all of them started to roll over in November, and high beta, high growth stocks have been in a big bear market since then, and we have been just going down and down and down since about the middle of May. Now, in May, we made a short-term bottom, but we really haven't made any significant upside, right? We have just been going sideways for a little bit less than a month, where you can see on the chart of the QQQs, we've really been just holding on sideways for the last like 10 days, and then we had a few days of uptrend before that. So in essence, we've just been in a little bit of a chop zone. As day traders and short-term swing traders, our job is to be trading when we see clear and defined trends. So what I think of as a definition of an uptrend would be higher highs, higher lows, and also I want to take a look at the slope of my major moving averages to see the trend on that particular time frame. So the 9-day moving average is your short-term trend. If it is pointing higher, then your short-term trend is higher. The 20 and the 50 are your intermediate. If those are pointing higher, then your intermediate term trends are higher. If they're pointing down, then the intermediate term trends are down. So what happens though is when they flatline, you are in a trendless environment. So beyond just looking at price, you can look at the slope of these moving averages to see what the trend is on a particular time frame that you're trading. So as you can see right now, we've been at a standstill for really the last few weeks. And so we get often these choppy market conditions. Trading in a bear market is no big deal. If you see these drops like in January, you know, stocks like Nvidia and Tesla, AMD, these high beta stocks, they were going straight down. So that type of trading is frankly very easy. It's no different than trading in a bull market. You're just shorting, and the trends are really powerful, and the setups tend to work out every single time on an intraday basis. So if you look at some of these day trade charts from January, what you'll see is like really, really clean shorts, and they tend to work out a majority of the time when you see the setup. But when the market goes sideways like it has been now what you end up doing is getting a choppy environment where you'll have stocks, they'll pop up and look like they're going to break out, but then those breakouts fail. Then what'll often happen is you'll see a stock testing down at lows, and you'll see some type of breakdown setup, but then those end up bouncing. That's called range trading in a nutshell, right? Where momentum trading techniques are like buy high and sell higher, that's a breakout, or short low and right cover lower, that's a breakdown. In range trading, it's the complete opposite. It's a buy low, sell high, short high, cover low environment. So you're essentially ping-ponging around back in the box. So you have to adjust your trading tactics depending on the market condition. So before you ever enter any trade in the morning when you're doing your pre-market homework, you want to first identify what type of market are we in. Are we in an uptrend market, a downtrend market, or are we in a range-bound or choppy market? Because then your trading tactics will vastly differ depending on the conditions that we're seeing. So when we get into these choppy market conditions, remember that you want to use range trading tactics. You don't want to ever chase on a breakout, because you'll see a breakout like this on Nvidia, it ends up failing because you're in that range. And you don't want to be shorting lows either, because the market's often getting bought at support as there's an underlying bid, and then you end up getting stopped out of your shorts. I find this to be the hardest markets to trade, is those range-bound markets, because those momentum tactics that you're using in the trending environment the previous weeks, which are so ingrained into your brain, they just don't work. So what are some things that you can do right now to combat choppy market conditions? So like I said before, the first thing we want to do is identify what type of market we're in. If we look at our charts and the major market indexes and we determine that we are in a range-bound market, then what we want to do is use these tactics to get into our trades. So the first thing that I like to do when I'm in that type of environment is focus on news plays. PR breakouts or earnings plays are plays that have some type of news out. It could be earnings, it could be a PR, but what happens is when you have a stock with a fundamental catalyst in a range-bound market, it's going to do whatever it wants because you have fresh news out and fresh order flow in it that it's going to move in ways that has nothing to do with the market. So when you have a proper news play, it's going to ignore the market indexes. So if you look at this chart of BABA the last 2 weeks, what have you noticed? Even while the market has been going sideways, BABA has gone up 30 points in the last week or two just because it's had news out. So it's showing that relative strength, but it announced a PR that China's easing some restrictions and possibly their anti-IPO could be going live again. And so that put a bid in all these Chinese stocks. And so once BABA started to go, you started to see a run in PDD, which announced positive earnings. And then you saw the rest of the group follow. And you'll see this with a whole host of other names too. If you look at the charts of HUSA or AERC, what you see is that these stocks that have PRs out or some type of sector momentum, they'll move in their own ways, and so you don't have to worry about that chop in the market. Beyond that, finding those independent plays, if you are trading market-dependent plays, what you really want to do is more of a range trading style where you're buying dips off support or you're shorting at resistance. Those are the two main plays that you can do, but what you don't want to do is chase the top of the range because you're stuck in a range. When you chase the top of the range, what happens? You go to the bottom of the range and vice versa. So those are the two main things that I would really focus in on. If you're a new trader though, focusing in on those PR earnings breakouts is going to be a lifesaver because then you don't got to sit there and watch the indexes tick for tick because that's a whole nother layer of information you have to process. When you're a new trader, it's like, dude, you have so much to go through your head, right? You're sitting there and okay, what's my chat room saying? What's my mentor saying? I'm on social media. I have to read these market indexes, the price of oil, interest rates. Is Jim Biden speaking today? Is the Federal Reserve speaking today? Do we have an interest rate decision today? And you have all this kind of macro news that you have to trade around so you can be in the best stock and it could look like this hot setup, but then you end up getting the rug pulled and you're like, what just happened here? And you end up starting to think that the market is just impossible to trade, but it's not. I've been having a killer year, so have a lot of my students, and we've been using these tactics really aggressively. So I highly recommend looking at these news plays, and that's gonna give you some extra juice. Look at this chart of PDD. The day it announced its earnings, it gapped up, and then it pulled all the way back and filled that gap. And then it just started to run for days and days, right? It ended up popping up 50% off that earnings day over the course of a few days. But the more important part is it was moving really clean. If you compare that to the chart of the QQQs, you'll see that there was really a true independence from what's happening in the market. I think that's what you want to look for. Guys, hopefully that helps. Feel free to ask me any questions. Smash that like button. Look forward to hearing from you.